So we had a bit of a shakeout in the markets yesterday. 205 million in liquidations as Bitcoin tumbles to 97,000. So that's just for Bitcoin. You have to stand up and pay attention to the bigger picture. What's happening, guys? We're running into Inauguration Day at the start of the year. Trump's going to announce his policies. When Trump announces his policies, he wants the biggest effect to happen on the back of his policies. So there's indecision running up to Inauguration Day. And when traditional markets drop, guys, Bitcoin drops even harder, altcoins drop even harder. They say when traditional markets sneeze, Bitcoin catches a cold. When Bitcoin catches a cold, altcoins catch the flu. So we've had a drop in the markets yesterday, 205 million in liquidations on Bitcoin. When we actually look at the chart, you can see how much Bitcoin dropped yesterday. 5.2%, guys. It dropped 5.2%. It's done it here, done it here. It's done it time and time again. This is the level that we need to be worried about on Bitcoin. Once we get a break and a close below 90,000, you can expect an acceleration down to 73,000. So I'm here to bring calm, guys. We've got lots to cover. I've got all your altcoin requests. We've got the Bullseye portfolio update. How's the Nupl doing, the net and realized profit and loss? Because that's picked the top of every Bitcoin cycle. Lots to talk about. Like I say, let's dive in. So, guys, if you're watching this, you've probably all survived. And this is me bringing calm to you because if you think yesterday was bad, you haven't seen nothing in crypto yet. And yesterday, after that liquidation hunt, or should I say non-liquidation hunt, we dropped in the fear and greed. Remember, fear and greed is a measure of sentiment. Sentiment drives any market. And this, guys, is the first of my midweek market updates. And this is the one that's got you guys most excited. So I've put a lot of effort into this, guys. And let me know on the back of this video if you found it useful and if you enjoyed the analysis that I'm showing you, because I'm trying to bring lots of different data and bringing it to one place for you. And remember, it's all driven by sentiment of fear and greed. So we're at 70 today. We're at 78 yesterday. We had a bit of a crash in the market or a dip in the market yesterday, which created a little bit more fear, but we're still in greed. You can see that Bitcoin has been stagnating between just under 90 and just over 60, whilst we're running into Inauguration Day, understanding exactly what Trump's new policies are going to be and creating a bit of narrative to drive the market forward. Markets do need a narrative. They need a catalyst to drive any bull market going forward. So that's what we're waiting for, is we're waiting for Trump's inauguration, we're waiting for Trump's decisions, we're waiting for the market to make a move, and we can just follow the market when it does that. So the next thing we're going to look at is the alt season index. Now, the name of the game of this, guys, is you've got top 100 altcoins. 175 of those altcoins outperform Bitcoin over a 90-day period. That means that it is a confirmed alt season as far as this measurement's concerned. You can see these are the top 100 coins. This is the last 90 days, and you can see we've got big runners here, 5,947% for virtual, 1,694 for Fartcoin. Anybody invested in Fartcoin, 640% for Pengu. And then we've got Bitcoin, the big daddy, all the way down here. So as far as the alt season indicator is concerned, now we're at 44. So there's 44 out of the top 100 altcoins outperforming Bitcoin at the moment. We're not in a confirmed alt season. And you can see when we look at the crypto bubbles down on the day, we've got some big movers down on the day. Brett 13.7%. You've got Bonk down 13.8%. We've got Quant down 10.1%, and one of the favorites, Pepe, 10.6% to the downside. So people are interested when the bubbles look like this. People are not interested when the bubbles look like this. So yesterday, would you be happy buying? Or would you be happier buying today at 15% cheaper? Could be 15% cheaper tomorrow, guys. We're going to look at some technicals very shortly. So that's what the bubbles are looking like. Next thing we're going to look at is the advanced DPO, which is showing us one thing. We can look at these levels here. This is forecaster, guys. I'm going to be showing you a lot of forecaster going forward because this aligns with my narrative that when I scale out of the crypto market, I want to be scaling into a different market. There's got a strong possibility of going into a bull run. That's outside of crypto, unfortunately, guys. I'm not going to be holding crypto for 3 years, for 4 years, for 5 years, for 6 years. I want to ride the bull market, and I want to be able to take advantage of that capital into other markets when Bitcoin, the rest of the crypto market, is going through a bear market. So you're going to see a lot more of forecaster, guys. I'm going to be demonstrating exactly how this works, how you can get insider information on the back of this. It's such a cool tool. Right, green strong buy. We've got green strong buy. You see down here, we've got green strong buy. What happens? Market moves up. Currently on blue, which is a hold at the moment. So anybody that's into Bitcoin, the advanced DPO is saying hold on to it at the moment. When it goes orange and when it goes red, that's the indications that it's time to nearly sell. So that's the advanced DPO. The next thing we're going to look at is the Bitcoin seasonality. And anyone that watched my last few videos would recognize the Bitcoin seasonality. And specifically, I want to look at 3, 5, last year, and 7 years. And we can see the seasonality between all of these years. Bitcoin bottoms out exactly on the 21st of January throughout the course of these years averaged together. Last year it happened, 3 years ago it happened, 5 years ago it happened. So this is a date that we need to stand up and pay attention to, is the 22nd of January. It doesn't mean it's going to happen exactly on the 22nd of January, guys, but what happens 2 days before that? Inauguration Day. So is Inauguration Day going to happen, and within the first 2 days, Trump's going to announce his policies? Those policies are going to be the catalyst that's going to drive the market forward, that's going to put positive sentiment into the market. That's food for thought, guys. So that's the Bitcoin seasonality, 22nd of January. That's the date to mark in the calendar. See what happens on that date. Then the next thing is the net unrealized profit and loss. Now, this is the thing that calls the market time and time again. And it's not when Bitcoin goes into euphoria. It's when the net unrealized profit and loss of people within the crypto market goes into greed and euphoria. That's when the crash begins. So you can see it happened here, 2021, happened here, 2017, happened here. So it hasn't happened yet, guys. We're currently in belief denial. So when this blue line moves up into euphoria, that's the time that you need to start panicking as far as Bitcoin's concerned. And that's the time in the previous cycles where we've had a rejection, and that's been the top of the market. And we're going to look at the charts next, but first we're going to jump into the Bullseye portfolio, because I want to demonstrate what a portfolio which is well managed and diversified can actually do. 624.33. $624 it lost yesterday. That was 12.1%. That's crap, guys. Nobody likes losing 12.1% of the whole of their portfolio. However, I've got a couple of rules built into this. When I was building the portfolio, I'd said, firstly, I can't average my position up. I can only average my position down. So that gave me an advantage that I could only buy things cheaper and only buy things cheaper. And that also told me that once the build phase is over, then I need to go to phase 2, which is capital regeneration. Build phase is pretty much over now, guys. I brought it back last week, and I got a couple of AI plays last week. They're both done about 20, 30% each. However, as a whole, like I say, 12.1% down. You can sustain it, guys, because of these rules that I was building at low levels of support. I was only adding 50. I couldn't average my position up, only down. Then that means the portfolio can sustain these 12.1% drops, because it's up 34.1% as a whole, even after the 12.1% drop. So it's up 1,580. And each one of these videos, guys, each one of these videos within this portfolio, and I've got a playlist, you can go back and check every single one of the videos within the playlist. Every single one of these videos I bought in front of you at just $50 a time. So this is my side portfolio, and I want to do something on YouTube in front of everybody, so you can understand what a build phase does and how you can take advantage of a build phase. It's not putting all your eggs in one basket, guys. Making sure you're not averaging your position up, and making sure you know when it's time to sit on your hands. So that's what the Bullseye portfolio is looking like now. I'm not going to be adding any to the Bullseye portfolio today. There's a couple that I was interested in. I'm going to be monitoring going forward for next week. But I'm not adding at the moment, guys. That's what it looks like, and that's what it's going to stay like. If it drops 12.1% tomorrow and I buy it today, that means I've lost 12.1% on the things that I bought today. Okay, charting time now. We'll start with the big daddy. You can see Bitcoin currently trading at 95,845. So I've said this is the area that we need to be concerned about, 91,256. Once we get a break and a close below that level, you could expect an acceleration in price down all the way to 72,836. And that is because of this gap and lack of a build-up of price action. So we've got no build-up of price action there. That's creating a gap. Once we get a break and a close below this topping pattern, then that means that you'd see a surge to the downside. Does that mean it's going to happen? It doesn't, guys. We've got a couple of weeks going into the Inauguration Day. We need that catalyst. We need that driving factor within the market that's going to push Bitcoin higher, and then it's going to push altcoins even higher than that. So it's a case of monitoring Bitcoin. That's going to be the level that I'm really going to be concerned about. If we drop below that level, expect some kind of a capitulation with Bitcoin and the rest of the altcoins, and probably traditional markets as well, guys. And you can see that by looking at the DXY. So we measure the DXY, which is the strength of the dollar against a bag of fiat currencies. The biggest fiat currency within the bag is the euro after the dollar. So it's the dollar trading against the euro, the pound, the yen, lots of other different currencies. When you've got a strong dollar, that's a weak economy, that's weak crypto, and that's weak markets. So when you see a strong dollar, that's bad for the markets, that's bad for crypto. And you can see that the DXY is just pushing up in an uptrend now. And one thing is we've had a break, we've had a close above this sideways accumulative phase. So to get a confirmation that we're going to go risk on, this DXY needs to drop hard. DXY needs to drop hard and it needs to close below this level here. It's at 106.142. So we're looking for a weak dollar, guys. We've got indications, or we've got no indications at the moment in the short term within the next few days that the dollar's slowing down. The dollar's putting in higher highs, dollar's putting in higher highs, dollar's putting in higher lows and higher lows. So we can look at that. We want a break of trend for the dollar. We want a reversal for the dollar. Then we want a pump on Bitcoin. We want a surge of total 3, which we'll get to next. Surge of total 3. Once we get a break and a close of the previous all-time high, which is sat up here, at 1.13 trillion. Once we get a break and a close above all-time high of total 3, 1.13 trillion, that's when I'm going to start scaling out of my entries within the crypto market over a period of time. So we need an injection of liquidity of 194 billion into the crypto market to get that break and to get that close above. So we've got a little bit more wiggle room now because we got that drop yesterday. So we need a lot more liquidity that's got to be surged into the market. Doesn't mean that this can't pull back down and double bottom here and test this as support. This area here is sat at 867 billion. So next, Cardano. You can see the same thing with Cardano as Bitcoin. It's on a shelf here. This shelf's going to be the important shelf because once we drop that shelf, then the lack of build-up of price action here signals that you're going to come back down and test this previous resistance to act as support. So I don't want to be bearish, guys, but these are the things that we need to be looking out for. And by looking out for that, you can create opportunities for yourself, because if you do get these nasty crashes down here, then by having limit orders at these low levels, cheeky limit orders at these low levels that you think is not going to get hit, might actually get hit. And if it's a capitulation reversal, it'll get bought back up as quick as it goes down. Market will carry on. That's going to be your catalyst to drive the bull market forward. And then happy days, we're all happy. Ethereum next. You can see Ethereum, the same as total 3. Ethereum needs a break. Ethereum needs a close above its previous all-time high. Sitting here back in November 2021, 4,873. So we can monitor Ethereum, we can monitor total 3, because Ethereum is going to be the second runner within the crypto market. It's the second one that needs to put in a real all-time high because it's the second biggest market cap. We've got other things that have tested all-time highs like Solana. Ethereum is really going to be the driving factor that pushes alt season pushes a new alt season, because Ethereum is the biggest altcoin. You can see we've got gaps left, right, and center here, guys. This is going to be a strong support here. We had a pullback, you've had a retest, you've had a pullback, you've had a retest, you got broken through. That's sat at $19.12. So if Chainlink comes back to $19.12, I'm expecting that to act as a strong support. That potentially could be a good entry point. So if the markets start pulling back, you've got a limit order here, not financial advice. And then the market pulls back even further to the next line of support, and you've got a limit order here. Small amounts. Then what does that do? It brings your average down here. If you get a capitulation and a reversal, your average is down here rather than all your eggs in one basket up here. That's Chainlink. Fetch, you've had a little bit of a fake out here on Fetch. You can see we created a bear pennant. It moved to the upside. Bear pennant moved to the upside. It's coming back. It's retesting the top of the pennant. It's retesting its 200 moving average. If we drop below the 200 moving average, expect an acceleration all the way to the downside to test this low of 17.99%, nearly 18%. So virtual as well. Virtual is creating a nice little trend here. However, the trend, we can see, is starting to weaken. So the trend's starting to weaken. This is going to be a strong level to hold, 3.36. So this doesn't look too bad to me, 3.36 on virtual. This doesn't look too bad to me because it allows for one thing. It allows for good risk management. If you trade in this at this level here, which is sat at 3.30, 3.29, if price pulls back to this 3.29 level, you've got an entry here, and then it reverses completely to the downside. It drops this trend line. That allows you to have a stop loss with the limited amount of capital at risk. CSPR next. Exactly the same thing. We need to hold this 200 daily moving average on CSPR. We'll bolt together between the moving averages. This creates indecision. So there's the 200. You've got the 50 up here. You've got price, which is going in between. So to get any kind of confirmation, you really want a break above the 50. You want this 20 period moving average, which is the faster period moving average, cross over the 50, price action to be trading above it. Happy days. So it's a monitoring game, that on CSPR. AI16Z, this one is completely run. If we just stick a fib on there, that's the only thing we can do from the bottom to its top, and we can look, it's probably hit the 382. It's had a reaction from the 382. I mean, this is something that I've been looking to get into, but I haven't been able to. I mean, if I had, for instance, $100, I'd be happy to put $25 in here, knowing that if it come down here, I could add another 25, knowing that if it come down here, I could add 50, and then that would bring my average around about this level here. 50, 25, 25. It's not financial advice. It's not something that I'm doing myself. It's just a way that you can start scaling down. What happens if you get this entry, it comes down and you get this entry, that's half of your position. It doesn't come down and hit this entry. However, price reverses and continues to the upside. Are you going to try and fill this entry here? Or are you going to move on and use that capital to go and live and fight another day? Because it doesn't matter if you don't hit all your entries. Don't expect to hit all your entries, guys. You need to start thinking greedy. If all your entries don't get hit, they don't get hit. You should be happy about that. AIXBT. AIXBT, have a look. Stick a fib on there. It's really difficult when there's not much data to go by, but you've got your 618 coming down here. That's sat at 0.41595. And then you've got even stronger support down here at the 786, which is 0.34485. So you tell me, guys, how would you do this? If you were looking to get into something, how would you do it? Looking to average your position over a period of time. And then when you're averaging out, guys, because you need to be thinking about that. If you're thinking about averaging in your position, you need to be thinking about averaging out your position. That's scaling out. That's your exit plan. Swarm, this one's run hard. This one's run hard. It's dropped its 382, guys, so it's likely to come back to its 618. 618 sat at 24,503. From its previous high, 24,503 is a drop of 60.95%. So it's not to be sniffed at. Then you've got Popcat, that's looking pretty weak. It's holding us, well, it's holding the support. This support's going to be a do or die support. You can see clues look left. Resistance, 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 flip support, it's holding support now. So this is going to be a strong level to hold, 66 cents. If you get a break and a close below, you're likely to come all the way back down to 44, just under 45 cents. Comp, let's see, what level's comp? So comp has dropped its 618. It's dropped its 618. This is going to be the area that we need to break and overcome, a 78.46. Otherwise, you're likely to come back down and see the 786 retrace, which is at 66114. So 6114 is the next level. If we break and close below 70.85. And finally, Arweave. So Arweave's holding a strong support at the moment. This is the area that I'd be scaling into, where price is now on Arweave. I've got $15.72 here. If I was wrong, price come down here. You've got $13.35. And then you've got this big build up of price action to fall back on. So this is going to act as your strong support. If we just put a horizontal on there, that's going to stick as your strong support. So that's all the way down at 979. If it comes back down to 979, expect a reaction from that. And there's just one more actually, which is not on trading view. Let me just get that up. What's this one? CH26. So CH26, is this trading against it's trading against USDT. Okay, so that's trading against USDT. This is the weekly chart. Each one of these candles represents 1 week of price action. Let me see if I can find a parallel channel because it's trading in a channel at the moment. Here we go. It's trading in a channel at the moment. You can see the top of the channel and the bottom of the channel. If we come back down and hit the bottom of the channel, that's sat at the moment at 68.34 cents, then it makes sense to be taking profits at the top of this channel here, taking your money out, that's $2.12. So that's like quite a lot, guys. That's quite a lot of an increase. Let's measure it. So from the bottom here to the top, that's an increase of 221%. So it's quite easy to take your capital out of that if it's something that goes and tests its previous high again. So that's CH26. Okay, guys, if you did like the midweek market update, let me know in the comments what you want me to cover next. I'm going to be doing crypto news every Friday. I'm going to be doing crypto tutorials every Monday. So make sure you subscribe to the channel if you think that any of those could benefit you, and I'll see you guys tomorrow.